Is AI going to ruin employment? Is everybody just going to lose their jobs and we're going to have to get universal basic income? Well, yes, potentially on needing to get stimulus. We're actually going to talk specifically about that in this video because Deutsche Bank just put together a piece on artificial intelligence, and listen to one of the, hint, this is a part of what we're going to talk about towards the end of the video where we talk more about stimulus, but listen to this phrase here. Ready for this? In today's society, the tolerance for dramatic changes to people's employment prospects is low. So if the impact of AI is going to be transformative, then we could expect new laws, regulation, and there it is, folks. There it is. Stimulus in the near term. The financial support to reduce the near-term impact. Now, we're going to talk about this near-term income and stimulus towards the end because some people are going to go, how the HE double hockey sticks, Kevin? How the HE double hockey sticks? Are we ever remotely going to go back to stimulus with these levels of debt? And I'm actually going to show you how exactly we might be able to. So, first though, we need to understand, is AI going to ruin all of our jobs and take away all of our opportunities? And is it time to destroy AI and anybody who pitches AI, including you, Kevin? I see that course featuring AI. Well, let's read the Deutsche Bank piece, at least the highlights of it. So here we go. Given how rapidly the use of AI could spread, it is true that there could be short-term dislocations in the labor market. To date, though, the fears about technology leading to less work have been unfounded over the long term, since new technologies don't just substitute labor, but they actually tend to complement it. If anything, the biggest risk of innovation tends to be, quote, failing to embrace new technologies. In other words, if you're, and in fairness, a lot of people are like this, but if you're like a lot of people right now and you're like, AI schmai, it ain't doing my job right now, I don't need to learn about that. That is historically a big mistake. So maybe somebody can like help you out. You know, maybe there's somebody who can catch you up to speed in the link down below. Anyway, okay, so continuing on here. Since centuries prior to the Industrial Revolution demonstrate, stagnant productivity meant that living standards changed little. Now, I want to explain that. That's very interesting. But first, there's a really fascinating line right here. Where is it? Somewhere in here. I'm just going to jump to it because it's a really fascinating line before we get into some of these items here. In this Deutsche Bank piece, what they say is just 150 years ago, almost all of society had one purpose. And I want you to think about this for a moment because it's more impactful. So if you're just like passively listening, you're like, just tell me, Kevin, stop for a second and seriously ask yourself, what did most people do 150 years ago? What was the one goal people had 150 years ago? You ready for it? Get food on the table. That's it. 150 years ago, the vast majority of society existed literally to farm food and put that crap on the table while you're wearing some burlap clothing like you're in Rust and not running around naked. That was life 150 years ago. And it's scary that 150 years ago, everybody's working farms, where today, the size of our agricultural workforce is like zero relative to what everybody else does. I mean, the amount of farmers watching this video is probably somewhere like 1%. So if you're a farmer, you're the 1%. So that's very interesting because it shows you, okay, yeah, that's a good point. We have had technology. It has created a lot of new jobs over the last 150 years. We're not all grain farmers anymore, okay? So what has history looked like? Well, these are fascinating. So in 1589, Queen Elizabeth refused to grant the inventor of a mechanical knitting machine a patent because it would put manual knitters out of work, was the fear. Famously, in the 19th century, and I've regularly referred to this line in on this YouTube channel, the Luddites, or the phrase the Luddites. And specifically, I like to call people Luddites who just don't adapt. Like, when I hear people are still storing stuff in paper files and binders, I'm like, Luddite. Why are you still doing that? I mean, unless you're like in the CIA or something like that. It's like, oh, we buried a bit of cloud. Or I don't know. It just seems wild. You're a Luddite. You're just not adapting with the times. But anyway, most famously in the early 19th century, a group of English textile workers called Luddites destroyed machinery, in part because of fears it would take away their jobs. To this day, the term Luddite is still used to those who are resistant to new approaches of working. Exactly. This is, yeah, I don't need to keep talking about Luddites, but that's one of the most frustrating things when you're running a company is when you're trying to hire people, and then you hire people who are just completely resistant to doing things the more modern way. Anyway, you're better off training somebody who doesn't know what they're doing, how to do it better. Anyway, in 1862, you had people form a union because grain elevators basically pissed off, listen to this job, you ready for this job? Shovelers in New York City. Yes, a shoveler was a job. And the shovelers would, quote, denounce the owners of elevators as capitalists and speculators who are robbing the honest laborer of his due. Okay, AOC of 1862. What actually ended up coming as a result of all of the innovation and all of this nonsensical fear of stuff like in the 1940, U.S. Senator Joseph O. Mahoney proposing a robot tax, that machines should be taxed in the proportion of the number of jobs they take away from humans. Or the Time magazine story of 1961 saying that basically new industries, yeah, in the past helped hire more people, but not anymore today. Now we're really going to start losing jobs. All of it ended up basically being complete BS. In fact, take a look at this. This right here is the Group of Seven's unemployment rate over the last 200 years, about. Actually, more like 250 years. You can basically see the unemployment rate has, with the exception of like booms and busts, pretty much stayed constantly low, like 3 to 4% over the last 250 years. Kind of wild. And here we are on Jobs Day talking about unemployment. So why hasn't there been a massive wave of unemployment anytime we get innovations? Well, look at this line. This one's particularly relevant. In centuries past, there were no cloud engineers. New jobs are created as the result of new technology. There were also no YouTubers, yet there are plenty today. Second, there are things that robots can't do, like persuasive argumentation. ChatGPT isn't great at being very persuasive, but it's pretty good at getting you baseline information that sometimes you still have to fact check. Number three, technologies increase our productivity and wealth, and they also increase our standard of living, and also give us more free time, so that way we can demand other services like personal fitness trainers, which basically creates more jobs for personal fitness trainers. Think about it. If 150 years ago we're all farming, how many of us farming are like, oh yeah, let's now also get a personal fitness trainer? Like, nobody. So you're like, I just had my personal fitness. It was called plowing. That's right, I plowed all day long. Anyway, so yeah, here's that example of 150 years ago. I thought that was really interesting. But anyway, now innovation leaves us open to more leisure and hospitality, better standard of living. Here's your agricultural industry. Agricultural industry plummeting over time, giving way to other services, leisure and hospitality, education and health. The more innovation you have, the more education you need. The more people need to understand how to type, how to use a computer, how to code. If there was no healthcare system in the past, because nobody knew what they were doing other than here, have some alcohol and bite on this rag while we chop your leg off, you don't really need much education. But now that we have a modern medical system, you actually do need to educate doctors for years, sometimes 6 to 10 years, which is wild. Shout out to the people who go through that for our healthcare system. Thank you. But anyway, then look at this. They give an example of Ford and the Model T. They're like, oh no, the conveyor belt is going to replace workers. AOC is going to be pissed of the early 1900s. Oh, wait, no. What did the conveyor belt system actually do? It actually reduced the cost of the vehicle from $950 in 1909 to just $290 by 1926, massively increasing the number of people who could afford a car, making them more productive because now more people could drive on newly built highways and go shopping in new strip malls or shopping centers that were built outside of cities, and they could live in suburbs, and they could go to advanced schools, and they could have more leisure time, and they could build their wealth. Innovation is surprisingly a good thing. Surprise, surprise. In fact, look at this particular chart. This particular chart is, first of all, what's shocking is, look at a time where we had little innovation. Between 1209 and 1709, you had basically negative real wage growth. In other words, if you were a worker in 1650, you made less money than the worker in 1209 because basically inflation reduced your real wage growth. That's insane. That 400 years later, you technically made less money. But that's because innovation was basically non-existent. Whereas when you actually put innovation into our society, look at what happened to real, which that's very important because real means inflation adjusted. What happened to inflation adjusted earnings? They skyrocketed. What happened to productivity per person? It skyrocketed. Now, what's fascinating about this is there were estimates back in the day that basically people like John Maynard Keynes suggested that, hey, you know, not only are you going to have better health and you'll be able to live longer. I mean, look at this. Apparently today, we are 7 inches taller than our pre-industrial ancestors. So 150 years ago, people were 7 inches shorter. We're getting taller because of modern healthcare. Interesting. Never thought about that before. I understand the life expectancy has at least gone up. Maybe it's stagnated in recent years. In fact, that's what some people argue is like, oh, but well, we've stagnated since the Great Recession. True, but maybe now AI is actually going to help us get that next big boost, right? Unless, of course, you're a Luddite and you're like, leave me alone, AI. No, I don't want to learn about AI. No, I don't want to take the catch-up to speed course from Kevin on featuring AI, which drops June 6th at 6 p.m. And yes, after Kevin finishes his work this morning, he's finally going to change those prices. And you can still email him at staff@meetkevin.com to lock in your best price before the prices go up. But anyway, going back to this, what's really interesting, and I love this stuff, is look at this. I'm just going to read this one because it's so fascinating to me. Even the most eminent economists have overestimated to the extent that which humans would find themselves underemployed as a result of economic progress. Back in 1930, John Maynard Keynes, famous Keynesian economist, he basically created that, wrote an essay called Economic Possibilities of Our Grandchildren. He predicted that living standards in the century would be 4 to 8 times higher, which actually proved to be correct. Living standards did go up 4 to 8 times. However, people didn't work less. See, he thought people would go down to just 15-hour work weeks because of innovation. That didn't happen, though. The work week hasn't really gone down that much. And the potential reason for the work week not going down that much is actually potentially because maybe work provides a sense of purpose and fulfillment. And that when you're unemployed, you actually have more negative health outcomes. You gain more weight, you're more unhealthy, you feel less happy, you're more depressed. But when you're working and you feel like you're actually contributing to real growth and you can make a meaningful change, that's actually what makes you most potentially happy. And now, that's would be on an average. That might not necessarily be true of everyone. But I thought this was interesting. Humans are inherently ambitious and will always seek out ways to progress themselves. So even if we all become richer in the future, individuals are unlikely to accept a good standard of living as defined in 2023. Instead, they will strive to, keep up with others, which will likely involve remaining in work to earn more money. As a result, even if some of our newfound wealth in the future is used to enjoy more leisure time, it is highly unlikely we see a complete one-to-one substitution of labor for leisure. In conclusion, if AI does prove, and then we got to talk stimulus, okay? And that's why I put this note here, because I knew I'd almost forget. If AI does prove disruptive, then it is to be expected that policymakers will protect workers against any short-term employment disruption, whether that is via laws, regulation, or a redistribution of income. Oh, that's interesting. So this is where we go to how the HE double hockey sticks. Are we ever remotely going to go back to stimulus with these high levels of debt that we face today? And what's actually the most simple explanation of how you can have stimulus with these high levels of debt is, quite frankly, the following. So write down what the level of debt is today. So we're going to write T equals, well, we'll just do T sub 0. T sub 0 will be time equals now, okay? So T sub 0, 31 trillion debt, 23, rounding a little bit here, trillion economy. That means we have a debt to GDP, using these numbers here, of about 134%. So we have more debt than our economy makes, right? That's bad. It's basically kind of like also saying we spend more than we take in, right? We're upside down. Now, let's go to T plus 10. So in other words, 10 years from now. What if in 10 years from now, because of the productivity that AI creates, in other words, people still work 40 hours a week, they're able to be so much more productive that they make more money and their wealth goes up, and hopefully they invest, like we talk about in the Stocks and Psychology of Money course or the Real Estate Zero to Millionaire course, whatever. That's how I went zero to millionaire, way before YouTube, real estate. And people have more time to spend on stuff. Now, all of a sudden, you could, well, I suppose you could work more, but you could also spend more, which is cool. You could travel more or whatever. What if our economy explodes faster than the rate of debt? And with AI, this is likely to happen. So now, all of a sudden, let's take our economy, and let's say our economy 10x's over the next 10 years. And so we go to $230 trillion of an economy. This is extreme. It's unlikely to 10x, but let's just make the math simple to understand how this could function. So say the economy 10x's over the next 10 years. Now your debt 5x's over the next 10 years. Okay? Well, 5x would put you at about 155 trillion in debt. Now, what is your debt to GDP? Well, now your debt to GDP ratio is actually just 67%. So now, what does this mean? Well, it means between now and 10 years from now, you could potentially spend 124 trillion more dollars, which basically is like 41 CARES Acts of stimulus. 41 CARES Acts of stimulus. And if I'm off by a factor of 10 here, then 4 CARES Acts. You see what I mean? But the point is to say, if the economy does become rapidly more productive, just like it has in history, right here, if this is what happens over the next 10 years, then as Deutsche Bank tells us, yes, you are going to likely see, quote, dislocations in labor markets, okay, in the short term. And those are going to be protected. How are those going to be protected? They are going to be protected with laws, regulation, or a redistribution of income. In other words, likely some form of universal basic income, probably not called universal basic income because that's deemed too progressive or leftist, but something more like higher unemployment insurance. Like, remember the days of, $500 a month? Or how about this one? You remember these days? Every American should be paid $2,000 a month at minimum just to be able to survive and put food on the table. Now, the problem with that is that going to cause massive inflation? Well, if you have this sort of productivity, not necessarily. Remember, let me catch you up to speed. What caused inflation during the pandemic? It was not the slow increase of spending. It was the sudden increase of spending. This spike is what caused inflation. You could fact check on me on this. This is very easy. All you have to do is type into Google St. Louis Fred and then type in, total Federal Reserve balance sheet. And then we could see basically the total assets of the Federal Reserve, which is a way of saying how much money did the Federal Reserve print. And if we look at the last 10 years, it's either relatively slow or negative. And you could do that right here. Relatively slow growth or negative. And if you look at this massive explosion here, well, no surprise that massive rapid explosion caused inflation. But if over the next 10 years, you do more of what we did during 2010 and 2018, where you gradually or more gradually spend more money on basically stimulative style programs for people who are being replaced by AI or some form of UBI, then what actually happens is you can, in a weird way, massively grow the economy while stimulating more and while not causing inflation. That is what we're going to leave it off on, because that is pretty wild to think about. That you could have UBI with no inflation and a more productive economy, and a richer economy, and one where people are more productive. However, you just have to remember the biggest warning that I think out of this piece was right here. The biggest risk would come from failing to embrace new technologies. That is exactly why you should embrace the How to Make More Money and Get SH&IT Done Faster course featuring AI, with the AI lectures dropping on June 6th at 6 p.m. We'll see you there. Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced